Welcome to our new video. Today, we'll be discussing the recent trend in crypto market worldwide, with a focus on the latest developments. Number 1, Marathon Digital mined 77% more Bitcoin in May with the help of its software. Marathon Digital Holdings. In May, the company managed to mine 1,245 Bitcoin, up by 77% from the previous month, thanks to its proprietary software. CEO Fred Thiel announced in a press release that the increase was due to an increased hash rate and a significant increase in transaction fees, which accounted for approximately 11.8% of the total Bitcoin we earned in the last month. Marathon has also managed to increase its operational computing power by 9% to 15.2 exahash per second, EHS, according to the statement. Thiel attributed most of the increase to Marathon's proprietary software in an interview with CoinDesk TV, saying that the software gives Marathon the ability to control the output of the machines, the uptime of the machines, scaling up and down the hash rate of the machines. Marathon operates its own mining pool, which means there can be fluctuations in Bitcoin production to the expected value, according to Ethan Vera, Chief Operating Officer at mining services firm Luxor Technologies. In early May, miners saw a rise in revenue due to higher transaction fees resulting from the popularity of ordinals. The protocol enabled added functionality on the Bitcoin blockchain such as non-fungible tokens and meme coins, driving up demand for block space. As a result, fees miners rake in for processing transactions surpassed block rewards in early May. Ordinals significantly helped large-scale miners like Marathon, said Vera. The 77% increase in Marathon's May Bitcoin production could likely be attributable to the fact that it wasn't running its machines at full capacity during April, potentially leaving a lot of room to increase production in the following month. In April, Marathon mined 50 Bitcoin per exahash of computing power, the least out of 14 publicly listed miners. In comparison, during April, Peer Clean Spark, CLSK, mined 78 Bitcoin, Riot Platforms, RROT, had 61, and Hive Blockchain, HIVE, produced 81 Bitcoin per exahash. Marathon shares on the Nasdaq were flat on Friday, slightly outperforming some of its peers while Bitcoin rose about 1.3%. Number 2, Bitcoin network hash rate hit a record high in May. JP Morgan analyst Reginald Smith predicts a slowdown in hash rate in the coming months due to a lack of funding for rack space. The hash rate is a metric that determines the network's health by measuring the computing power involved in processing transactions on the Bitcoin network. The higher the hash rate, the more secure the network is. According to data from May, the daily network hash rate increased to a record high. This was the 5th consecutive month of an increase in the metric. However, JP Morgan Smith believes that future growth in the hash rate could be slower, lagging behind Bitcoin price appreciation due to the lack of available rack space. JP Morgan tracks the market cap of the 13 US-listed miners, which totaled $6.7 billion last month, a 5% increase from the previous month. Mining difficulty is another metric that typically moves in tandem with the hash rate. In May, it also climbed to a record high, indicating how challenging it is becoming to mine Bitcoin and maintain network security. Transaction fees also saw a spike last month, reaching over 5 Bitcoin per block mined, according to JP Morgan Smith. This could lead to modest earnings upside for the industry in the coming quarters. JP Morgan has also recently predicted that Bitcoin's price should be trading at $45,000. However, as we've seen in the past, the market is always unpredictable and can fluctuate rapidly. Number 3, Bitcoin whales continue to accumulate amid market distribution. Glassnode's Bitcoin accumulation trend score shows a stark contrast between the whales who are aggressively accumulating and other major cohorts who are experiencing heavy distribution. The dichotomy hints at possible underlying market dynamics. Large investors might be viewing the current Bitcoin price level as an attractive entry point, even as others take the opportunity to secure profits. At the time of writing, the price of Bitcoin stands at $27,213.09, according to data from CoinGecko. While the price may be a factor in the whales' accumulation efforts, it is not the only trend that has emerged. In an interesting development, significant Bitcoin whales are retreating from crypto exchanges, as evidenced by a decreased exchange whale ratio. This metric, derived from the total Bitcoin volume of the top 10 transactions divided by the total Bitcoin volume flowing into exchanges, has slid to around 0.3, a level unseen since March. This could mean that major Bitcoin holders are either retaining their assets or moving them to other investments or private wallets. These contrasting dynamics in Bitcoin trading may indicate a possible shift in the cryptocurrency market. While smaller cohorts may be selling, the largest investors continue to accumulate. The term whale is used by Glassnode to refer to individuals or entities that have more than 10,000 BTC, and their accumulation efforts are shaping the market. As always, market participants will have to navigate these choppy waters with careful analysis and risk management. Number 4, JP Morgan predicts strong retail demand for Bitcoin leading up to halving. The Bitcoin halving event is one of the most anticipated events in the crypto industry, and the upcoming halving of Bitcoin, BTC, is projected to occur in April 2024. During the halving process, the mining reward for Bitcoin is halved, which effectively reduces the number of newly generated BTC within the network. This event has a substantial impact on the Bitcoin network and is closely watched by community members. The crypto community has high expectations that this event will potentially propel the king coin, Bitcoin, to reach new all-time highs or even exceed them. However, JP Morgan holds a distinct prediction for the Bitcoin network. According to JP Morgan, the retail demand for Bitcoin will continue to remain robust in the year leading up to the next halving event. This suggests that JP Morgan foresees sustained interest and investment from retail investors in the king coin, exhibiting a positive outlook for Bitcoin's performance in the near future. While acknowledging the recent surge in retail demand within the Bitcoin network, JP Morgan also linked this increase to the emergence of Bitcoin ordinals and BRC-20 tokens. In the post-halving landscape, various members of the crypto community have been sharing their predictions, amongst which $40,000 is a common prediction. Interestingly, JP Morgan also appears to align with this sentiment. This further shows a positive outlook for Bitcoin's price potential following the halving event. At press time, Bitcoin was trading for $26,766 with a 1.56% daily drop. Additionally, the asset is 61.07% below its all-time high of $68,789.